Pi Network has quickly become a global phenomenon, capturing the attention of millions worldwide. Its innovative approach to cryptocurrency mining has sparked considerable interest and debate within the digital currency space. Promising to make cryptocurrency mining as easy as tapping a button on your phone, Pi Network aims to democratize access to digital assets. This ease of use is a core tenet of its design, setting it apart from more complex mining processes. Millions of users called pioneers have joined, forming a vast and engaged community. This rapid growth underscores the appeal of Pi's vision and its potential to disrupt traditional financial systems. Drawn by the app's simplicity, even those with no prior experience in cryptocurrency can participate. The intuitive interface makes it accessible to a broad audience, fostering inclusivity in the digital currency revolution, and the chance to earn coins without technical know-how or upfront investment. This low barrier to entry has been a key driver of Pi Network's widespread adoption. Launched by Stanford graduates, Pi Network benefits from the credibility and expertise associated with its founder's academic background. Pi's viral referral system has fueled explosive growth, especially in Asia, where mobile-first economies are thriving. The network effect has played a significant role in its expansion across the continent. Unlike Bitcoin's energy-hungry mining, which requires specialized hardware and consumes vast amounts of electricity, Pi's approach is accessible and community-driven, emphasizing sustainability and inclusivity. This focus on environmental consciousness resonates with a growing segment of the population. Currently, Pi operates in an enclosed mainnet phase, a controlled environment designed to test and refine its functionality. Users can transfer coins within the ecosystem, fostering a sense of community and enabling early adoption of Pi as a medium of exchange, but can't trade them on external exchanges yet, limiting their immediate real-world value. This restriction is part of the controlled rollout strategy. This has created a unique, self-contained economy, a microcosm of the broader cryptocurrency landscape, where users experiment with peer-to-peer transactions for goods and services, exploring the potential of Pi as a practical currency. The big question, will Pi ever reach open mainnet and gain real-world value, becoming a viable alternative to established cryptocurrencies, especially in markets like China, where digital finance is booming, but the regulatory landscape is complex and ever-evolving, but tightly regulated? Navigating these regulations will be crucial for Pi's success in the Chinese market. Understanding Pi's ambitions versus China's strict financial controls is essential for assessing its long-term prospects, is key to predicting its future in one of the world's largest economies, and whether it can truly achieve its goal of becoming a global cryptocurrency. Pi Network is designed with a mobile-first philosophy, recognizing that smartphones are the primary computing device for billions of people around the world. Instead of relying on traditional energy-intensive mining processes that require specialized hardware, Pi utilizes the Stellar Consensus Protocol. This makes mining accessible to anyone with a smartphone. Security within the Pi network is established through what are known as security circles. These are essentially trusted groups of users, vouching for each other's authenticity and preventing malicious actors from infiltrating the network. This approach not only enhances security but also contributes to making the entire system efficient and remarkably user-friendly. Participating in Pi mining is incredibly simple. Anyone can begin earning Pi coins by simply pressing a button within the app on a daily basis. The Pi Network app is designed to be lightweight, ensuring it doesn't consume excessive battery power or slow down your phone's performance. The development of Pi Network has been strategically planned and executed in 3 distinct phases. The first phase focused on building a substantial user base, attracting millions of pioneers worldwide. The second phase involved the launch of a developer testnet, allowing developers to experiment and build applications on the Pi network. Currently, Pi network is in its third phase, the mainnet, which is presently enclosed to allow for controlled testing and refinement. During this enclosed mainnet period, users can migrate their Pi balances to the mainnet blockchain and engage in internal transactions. However, external trading is deliberately blocked to mitigate the risks of speculation and ensure a stable ecosystem. The ultimate objective is to transition to an open mainnet. This would enable Pi to be listed on cryptocurrency exchanges, potentially giving it a publicly determined value and wider accessibility. Achieving this transition hinges on the successful completion of mass KYC, Know Your Customer verification. It also depends on the development of a robust and mature Pi network ecosystem with practical applications. This carefully phased rollout strategy is intended to foster real-world utility and value for Pi. The goal is to establish a solid foundation before exposing Pi to the inherent volatility of the cryptocurrency market. Many supporters view this cautious and measured approach as prudent and responsible. However, critics argue that the pace is too slow and the future of Pi remains uncertain. The global community is keenly observing Pi Network's progress, eager to see whether its deliberate and cautious strategy will ultimately lead to success. China was once the heart of the crypto world, dominating Bitcoin mining and trading thanks to cheap electricity and a tech-savvy population. Early enthusiasm created a booming industry, from mining giants to major exchanges. But the government has always viewed decentralized cryptocurrencies as a threat to financial stability and capital controls. Periods of tolerance were often followed by harsh crackdowns, as authorities sought to prevent capital flight and protect consumers. While China bans private cryptocurrencies, it champions its own state-controlled digital currency and blockchain innovation. The government's objection isn't to digital money itself, but to any system it can't control. This has created a landscape where private crypto is suppressed, but state-led digital finance is aggressively promoted. For Pi Network, this means navigating a market that's both highly innovative and tightly regulated. China's crackdown on Bitcoin began in 2013, when banks were barred from handling crypto transactions. The 2017 ban on ICOs and domestic exchanges pushed trading underground and offshore. In 2021, a sweeping ban targeted mining and all crypto-related business activities, effectively ending China's dominance in the sector. These actions created a hostile environment for cryptocurrencies, isolating them from the formal financial system. While individuals can still hold crypto, almost all related services are illegal. The government's message is clear: parallel monetary systems won't be tolerated. This history sets a daunting precedent for any new cryptocurrency, including Pi Network, seeking legitimacy in China. The regulatory wall is high, and getting higher. Despite persistent rumors, there's no credible evidence that Chinese banks are considering Pi Network. Social media is rife with unverified claims and doctored images suggesting secret bank integration, but these are baseless. No official statement from any Chinese bank or regulator supports these rumors. Given China's strict ban on crypto and financial institutions, any bank involvement with Pi would be illegal and risky. The rumors persist due to wishful thinking among Pi holders and the information vacuum created by Pi's enclosed ecosystem. Positive speculation keeps the community engaged, but it's not grounded in reality. Individual bank employees may use Pi privately, but this doesn't reflect institutional support. The official stance remains total opposition to private cryptocurrencies. Any serious analysis must separate community hopes from regulatory facts. To truly understand why Chinese banks are unlikely to adopt Pi Network, we need to examine the landscape of digital currency in China. Let's take a closer look at the digital yuan, also known as ECNY, China's own state-backed digital currency initiative. This project is a key priority for the Chinese government. The ECNY operates on a fully centralized model, granting the government comprehensive control over its issuance, distribution, and transaction monitoring. This level of oversight is central to its design. Pi Network, by contrast, represents a fundamentally different approach. It aims for decentralization, empowering users through global participation and a distributed network. The ECNY is strategically designed to strengthen state power, enhance monetary policy control, and maintain financial stability within China. Pi's ethos, on the other hand, is user-driven, community-focused, and inherently borderless, seeking to create a more inclusive financial system. China is aggressively rolling out the ECNY across the country, seamlessly integrating it with major payment platforms and digital ecosystems. They are also running extensive large-scale pilot programs to refine its functionality and user experience. Given this context, there's simply no strategic need for Pi within the Chinese financial system. The state's digital currency initiative already effectively fills that role and aligns with national objectives. Supporting Pi would not only be redundant, but would also directly undermine the strategic goals of the ECNY project. This would create a conflict with China's broader financial goals and its vision for a digitally driven economy. Chinese banks, as key strategic partners in the ECNY rollout and implementation, therefore have absolutely no incentive to back a competing decentralized system that challenges the established order. The ECNY isn't just another competitor in the digital currency space, it represents the government's definitive answer and strategic response to the rise of private cryptocurrencies and decentralized finance. For Pi Network, this effectively means that the door to official adoption and integration is firmly and decisively shut within the Chinese financial system. China's 2021 ban criminalized nearly all crypto business activities, making bank support for Pi impossible under current law. Any bank offering PI services would face severe penalties, including shutdown and prosecution. Strict capital controls are another barrier. Pi could enable capital flight, which regulators are determined to prevent. Integrating Pi into state bank systems would be a massive technical and compliance challenge, with little incentive for banks to take the risk. Pi's own technology is still unproven, making integration even less attractive. Know your customer and anti-money laundering requirements add further complexity. Chinese banks must meet stringent regulatory standards and can't rely on Pi's internal KYC. The cost and risk of compliance for an outlawed asset are prohibitive. In short, both legal and practical barriers make Pi's acceptance by Chinese banks a non-starter. The regulatory landscape leaves no room for compromise. If Chinese banks ever accepted Pi, it would be a seismic shift, instantly legitimizing Pi and sparking massive adoption. The value of Pi would likely skyrocket, and China's financial landscape would be transformed. It would mean a reversal of state policy, allowing a non-sovereign currency to operate alongside the yuan and ECNY. This could drive innovation and competition, but also threaten the government's control over monetary policy. Regulators would face new challenges: volatility, consumer protection, and illicit use. Globally, such a move would shake the financial system and force other countries to rethink their crypto policies. It would mark a paradigm shift toward a hybrid world of state and non-state digital currencies. But for now, this scenario remains pure speculation. The current reality makes such a reversal extremely unlikely. The idea of Chinese banks adopting Pi Network is, for now, a fantasy fueled by rumors and hope. China's government has spent years dismantling private crypto infrastructure to protect its financial system and promote the ECNY. Pi's decentralized vision is fundamentally at odds with China's centralized digital finance strategy. For a bank to support Pi would be to defy core state objectives, an unthinkable move in China's political system. The Pi community's enthusiasm can't change the legal and political realities. Unless there's a radical policy shift, Pi's future in China is limited to its own ecosystem, not the formal banking sector. Its global success will depend on open mainnet and traction in more permissive markets. In China's tightly regulated digital economy, the door to bank adoption remains firmly closed.